Greetings, tax tip lovers, and welcome to this week's Top Tax Tactics in just 5 minutes. Come, gather around, people, and let me share with you the transformative power of legitimate tax planning. There's up to £130,000 of tax allowances available to couples, and all with a sell-by date of 5th of April. So I'm just going to put this out there. Let's start with pension no-brainers. Most people can make pension contributions up to 100% of their earnings, capped at £40,000. For higher rate taxpayers, it means that you contribute up to just £24,000 and the government gives you up to £16,000 on top. Lower rate taxpayers can contribute up to £32,000 and the government gives you up to £8,000 on top. Even if you've no relevant earnings, you can make a contribution up to £2,880 and the government gives you a top up of £720. And that's every year under current rules. And by the way, if you don't use all your allowances in 1 year, you can carry it forward for up to 3 years, which means that any unused allowances for 2017-18 will be lost after the 5th of April. And here's the income tax must-dos. If you're married or in a civil partnership, then ensure each of you has sufficient income to use your tax-free allowance of £12,500. Why? Because that's up to £25,000 of income upon which you pay no tax. If you can, then you should pay dividends of up to £2,000 to each spouse or civil partner to maximise your tax-free dividend allowances. Why? Because that's £4,000 upon which you pay no tax. Try to ensure each spouse or partner has sufficient savings income to utilise the £500 or £1,000 personal savings allowance. Why? Because that's up to £2,000 upon which you pay no tax. Annual ISA subscriptions of £20,000 each should be maximised. And why? Because the investment return from ISAs are free from capital gains tax and free from income tax. So let's look at capital gains tax. The annual CGT allowance of £12,300 is very valuable. And if you don't use it, you lose it. Why is that important? Well, because that's £24,600 upon which you pay no tax. Consider selling assets to realise gains and increase base costs for future sales. There are some anti-avoidance rules to be aware of, but any half-decent accountant will be able to help you with those. Again, if you're married or in a civil partnership, then you should ensure each of you uses your CGT annual exemptions and assets can be transferred tax efficiently to facilitate this. Capital losses have to be claimed within 4 years of the tax year in which the loss was realised. So losses realised during 2016-17 must be claimed by the 5th of April or they're lost. So go figure. Capital losses can be carried forward, offset against future capital gains, of course. That brings us to inheritance tax. Everyone has an annual exemption of £3,000. That's £6,000 per married couple or civil partnership, which can be given away without any IHT implications. Unused exemptions can be carried forward for 1 tax year. You can make small gifts of up to £250 to as many individuals as you wish, and all are exempt from IHT. That seemingly ridiculous rule has a shelf life until the first multimillionaire decides it's going to be fun to be remembered for flouting it. Oh, and gifts made out of normal income are also exempt. So bringing all that together, for couples, that's up to £130,000 of tax allowances, which you will lose if you don't use them by the 5th of April. Now, I'll say that one more time for the hard of thinking. For couples, that's up to £130,000 of tax allowances, which you will lose if you don't use them by the 5th of April. Oh, and Reggie Slater, that's the best ever name for a legislator, isn't it? wants me to remind you that tax year end is a good time to review wills and make sure you still comply with legislation and they reflect your current wishes. Okay, I hope you found that useful. And as ever, if it is time to take action to sort your property tax planning, then here's how. You can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free power hour review with property tax experts who are ex PwC and ex HMRC and will make your property tax planning like it was our own. All right, stay bright. Catch you again for breakfast next week. Ta-ra.